investors talking about the returns that they can get in cash today reminds me a whole lot about investors back in the period of 2020 through 2022. We're talking about the stock market. Today, an investor can go out and earn 4 or 5% on their money in cash. Everybody's a hero. Sounds really intriguing. Why wouldn't somebody invest in cash at this point with those types of returns? But I think what's happening here is people are forgetting the big picture of investing and the power of the financial markets. So let's take a little bit of a study here and or a deep dive, if you will, and talk about this. Since 1970, investing in cash on $1 million portfolio over a 20-year period, the historical returns on cash are about 2.6%. So that $1 million that you invested in cash would be worth $1.7 million after that 20-year period. Now, let's just say cash continued to earn 5%, sort of what it's earning today. That same $1 million would grow to $2.5 million. So clearly, a better number than the 2.6%, clearly. But interest rates are probably more erratic and harder to predict than even the stock market. So for anybody to time it just perfectly and get that 5% over 20 years, it's going to be pretty hard. But just so you know, 5% is comparable to what a bond portfolio paid over the last 20 years. Now, let's take it a step further and say you invested in a 60% stock, 40% bond portfolio over that same period of time for $1 million. You would have over $4 million in your portfolio. And if you took it a step further and put it all in stocks, you would have over $5.5 million. So yes, while that 5% return sounds compelling, and that $1 million grows to $2.5 million, let's say, if you're lucky, putting it in 100% stocks doubles that amount and even more. Now, are we suggesting that you put your money 100% in stocks? Of course not. Are we suggesting that you put your money 100% in cash? Of course not. But what we are suggesting is probably a combination of all three, being stocks, bonds, and cash, will likely yield you significantly more money than if you just allocated the money in cash.